Welcome to Data Points. I'm Brian Hamilton. This week we have several very important economic reports coming out. These top-tier reports will give us key data on future indicators regarding factory orders, inflation, retail sales, housing, and consumer sentiment. The biggest report is coming out Wednesday, the Consumer Price Index. With the current inflation worries and the implication of the Fed raising rates at a faster pace, this will be the most closely watched report this week. The last report showed that wages grew by 2.9%, which spooked the markets and caused the flash crash. Current year-over-year expectations are for a slight dip from 2.1% to 2%. Any pullback will be viewed as a positive for the markets, but if we see an uptick, it could cause the markets to fall once again. Also on Wednesday, the retail sales report will be released, and this will tell us if the recent strength in the segment will continue. Expectations are for a 0.3% gain, which would be the 7th consecutive month of a positive reading. A positive reading would help many retail companies like Dillard's, Kohl's, Conn's Inc., and Foot Locker, all of which currently hold a Zacks Rank #1 strong buy rating. The retail report will also be tied to Friday's consumer sentiment announcement, which is expected to remain elevated. As you can see in the slide, consumer sentiment has been around a reading of 95 for over a year. If consumer sentiment remains at or near its current levels, it bodes well for the retail sector as this report gauges consumer spending and the overall attitude of the economy. This week, we will also see two regional manufacturing reports, the Philly Fed and the Empire State. These reports will give us the conditions in the local regions and will be an indicator of the more important ISM Manufacturing Index coming out on March 1st. The recent readings have been very strong and have shown positive momentum in production and new orders over the past several months. Currently, the regional reports are expected to show continued strong growth. Lastly, we will see the two important housing reports this week. On Thursday, the Housing Market Index will be released. This forward-looking report has remained high for the past several months. Two closely watched parts of this report will indicate if the increasing interest rate trend will begin to show any signs of having a negative impact on the index, and if the uptick in mortgage rates is impacting housing affordability. This report, coupled with Friday's housing starts data, will be an important barometer for the housing sector and several other subsectors that rely on new housing. Housing starts took a bit of a dip last month due to weather-related issues, as you can see in the chart. But this month's data is supposed to be clean of the weather-related issues and is currently expected to show a snap back to 1.23 million units, well above December's reading of 1.1 million units. Also, housing permits are expected to remain high at 1.3 million. A combination of an uptick in both housing market and the housing starts will be beneficial for home builders like KB Homes, Linear Corp, and D.R. Horton, all of which currently carry a Zacks Rank #2 buy rating. The data will also be a forward indicator for companies that depend on new homes who supply them with furniture, appliances, and other household needs. Companies that can benefit from a positive housing data include Restoration Hardware, At Home Group, Beacon Roofing, and Electrolux, all of which currently carry a Zacks Rank #1 strong buy rating. If these data points come in as expected, it will set an overall positive tone for the markets for the next several weeks. Thanks for watching. Be sure to check out more data point videos as we highlight all the important economic news that impacts the markets.